All right, folks, thank you so much for joining us. I'm John Kogan. I'm the co-founder and CEO of Performative. And along with our sponsors, Tipalti, we welcome you here this afternoon and this evening. Thanks so much for joining us. I'm also a 5-time CFO, so I feel your pain. And tonight we're here hopefully to relieve a bit of that pain, and we're going to be talking about AP, holistic AP, and what's going on in this area, which is critical to all companies, and also hopefully together find some ways to surmount some of the challenges of managing accounts payable, in fact, the entire AP process. So welcome, let's go ahead and jump into today's topic. Accounts payable has historically been a function tied down by inefficient manual processes, which lead to traditionally heavy cost burden and an organizational structure which tends to be expensive, slow-moving, and does not provide the kind of visibility that today's finance leaders need in their organizations. And this is for companies large and small. It doesn't matter what industry you're in, how many people you throw at this challenge, the challenges tend to be fairly universal. However, a new approach is taking hold that holds some great promise for all companies and all industries, and this is holistic accounts payable, which we'll be talking about at length tonight. Today you will hear from leading finance experts and executives, and they'll be talking about holistic AP, what it means strategically, what it means operationally. And it really is a sea change that enables great new functionality and speed at companies, and hopefully we'll all take some great learnings away from this. We have a wonderful program this afternoon. I hope many of you took advantage of the networking, and I'm sure we'll have folks coming in for the next 15 or 30 minutes so, busy folks in the office of the CFO. We're going to start out next with a presentation from a Forrester analyst, who I will be introducing momentarily. Then we'll have a panel of experts and finance executives who will be talking about best practices and real-world accounts payable. And then that will be followed by a presentation and product launch by Chen Amit, who is the co-founder and CEO of Tipalti. And after that, we're going to enjoy more networking, an open bar, and a wonderful dinner outside on the terrace area, or inside, I guess, on the terrace area in this massive atrium out here. And I certainly hope that everyone sticks around for that. I think that'll be really enjoyable. There will be multiple opportunities to participate actively today. Certainly the panel will be a great opportunity to ask questions. And as we listen to, or actually after Chen provides his product presentation today, we'll also have a chance for Q&A there. So please feel free to raise your hand and participate. We'd love to hear from anyone and everyone in the audience. So without further ado, let's go ahead and introduce our first speaker. It is Andrew Bartels. He is a vice president and principal analyst with Forrester. As an analyst, Andrew is a leading expert on tech market trends and sizing, cloud and smart computing technologies, tech budget benchmarks and processes, and technology's impact on business operations. He's a thought leader in buy-side technologies and business networks. And he has been with Forrester for 15 years, and today he's going to talk to us about the rise of holistic AP. Andy, come on up. Thank you. Pleasure.
Okay. Well, with that introduction, it's hard to go up from there. It's got to go down. You know, you start with a high level and then go down from there. So I'll try not to go down too far. What I'm going to focus on today is not just AP in general, but specifically the challenges faced by hyper-growth companies. And that's what I think many of you in this room are. Especially hyper-growth companies who are global. It's a changing world. And so I'm going to talk about what that means in terms of supplier payment challenges and how you will need to address those going forward. Quick word on Forrester. How many of you are Forrester clients? Nobody? How many know about Forrester? Okay. Anyway, we are a technology advisory firm. We work with business leaders and technology leaders to help them develop customer-obsessed strategies to drive growth. How many of you remember this ad campaign? handful of people. How many people know what Oldsmobile is? Okay. The point of this ad was done, it's got to be about 7, 8 years ago. They were trying to distinguish their old Oldsmobile from the new Oldsmobile. So this is not your father's Oldsmobile, the new one today. Well, of course, as you can see, it is now your father's Oldsmobile. But this is not yesterday's business. The folks in this room are not yesterday's companies. You're dealing with a new set of challenges, a new set of issues. I've been around for a long time. You can tell my gray hairs that I've been, around the business for a long period of time. Back when I started, this is what you want to see in a typical income statement. You want revenues to be growing steadily. You want to be profitable. You want to be cash flow positive. Very conservative business model. This is today's business. You plan to lose money. You plan to invest for sales. You're trying to get to strong growth, and this probably growth understates the type of growth you're seeing. So it's a different finance model. It's managing a world in which you're growing rapidly, your costs are rising rapidly, you're investing in the business, you're investing in marketing, you're building for growth. So at some point in the future, it'll become profitable, but right now it's going for growth. This is yesterday's business. US-based. If you're a mid-sized company, you would have an office in New York, you'd have an office in San Francisco, one maybe in Chicago, maybe one in Atlanta, maybe one in Dallas. That was your scope. You're focused on the US. That's what you were doing. Today's business is global. Before I talk with several of you, and many of you I know have global operations. You've got customers, you've got suppliers in Europe, in Africa, in Asia. And there's a very different challenge that you face compared to a company that's US-based, US-centric. This is yesterday's business model, how you're structured. You had your shareholders, your owners, you had your managers, you had your employees, you had the community. It's a fairly straightforward world you operated in. Today's world is much more complex. Not only do you have your direct owners, you've got VCs who are investing in you. Not only do you have your employees, you've got freelancers. You've got contractors who are part of your network. There may be others who contribute in different ways, who you have to pay. You have outsourcers, and those outsourcers could well include Amazon Web Services or Microsoft Azure or other cloud providers who are what you're running. So it's a much more complex business structure than the old business structure. Yesterday's payments was pretty simple. I've been covering the source-to-pay process for a number of years, 15 years probably at least. And most of that time, I quite frankly didn't focus too much on payments. I focused everything up to payments, but payments itself struck me as being fairly straightforward. You're paying in dollars basically. You were using checks possibly, or if you're getting more advanced, you're using ACH payments. You're using P cards. But it's a fairly narrow portfolio of payment methods you're using, and you just was trying to figure out what's the right mix. And if you're sophisticated, you're trying to move away from check payments to ACH payments, trying to move more to electronic payments. Well, take that and now multiply that. So now you're not dealing with dollars. You're dealing with euros, yen, yuan, literally dozens of currencies. You're not only dealing with the US ACH system, NACHA, you're dealing with European, you're dealing with other ACH systems. You're dealing with new payment products that you may not see in Europe, like JCB. Who knows, you may be doing Bitcoin. You may be dealing with PayPal. So the payment methodologies in today's world for you are far more complex than the US-based small portfolio products you had to deal with. In today's world, the CFO is playing a different role. Today, we think at Forrester that CFOs will be and should be focused on customer-centric functions that support revenue growth. With Forrester, we use the term business technology, which we use distinct from information technology. We define business technology as those technologies that firms use to win, serve, and retain customers, essentially drive revenue growth. It's a little hard to read because it's a small screen, but you can kind of look a little bit that you have functions like accounts receivable there. You have CPQ. You have, running up this axis, treasury, tax, planning, budgeting, finance, consolidation, profit analysis, management reporting performance, billing, a whole bunch of technologies that are used, that firms or CFOs are using to optimize revenues and to provide insight into how the firm is performing. What's missing from this chart, if you look closely, is AP. Where's AP in this? Well, AP is still there. But in order for companies, in order for CFOs to pivot and focus on what we think should be the focal point, how can the CFO help their firm optimize revenues, optimize finance by being customer-focused? You still have to do with the AP side of things. You still have to do with the accounts payable aspect of it. Now, part of the objective here is, in fact, to make AP more efficient. If you're a CFO and you want to be addressing those challenges that you're facing on the revenue side, on the performance management side, on the optimization side, you can't have a large chunk of your finance resources tied up in the AP function. So you want to move from yesterday's AP department, which had a lot of different people running around trying to do a lot of different things, to today's AP department, where a small number of people using technology can manage those activities much more efficiently. So AP is still important. It's important because not only you want it to run efficiently, you can't run your business if you're not paying your suppliers. You can't sustain your growth if you have unhappy suppliers who are late or frustrated or not happy with you. So it does mean AP still matters. It means, though, you've got to be looking at how can we address the two major functions of AP and make them work better. Part of that is the invoice side of it. How can you improve your invoice processing? How can you make your invoice activities work more effectively so that you can process more invoices more quickly with fewer staff, validate them, and by knowing that they're valid, be able to pay potentially faster. Now, you don't have to pay faster. But in a world in which you know what the invoices are valid and that you can pay faster, that gives the opportunity to work with suppliers to say, look, if you want to be paid faster, we can do something about that. You give us a little bit of a discount, and we'll pay you faster. In a world where interest rates are very low, that doesn't really pay to hold cash, that's a very attractive idea. But you also got to look at your payment side of things. So I mentioned earlier, you want to move, of course, from paper to electronic. But you've also got to look at how can you handle the non-traditional payment methods, at least non-traditional from a US context, that you've had to deal with, that the firms have had to deal with, and handle these new payment methods that you have to deal with if you're operating in Europe, operating in Asia, operating in Africa. Now, there are a lot of challenges in accounts payable, as you all know. There's challenges around workflow and around approval. You know, what approval do I have to have? What workflow do I have to get that approval? How do I structure that both on the invoice side and on the payment side? What signatory rights and authorities do I need to have? How is that structured? How is that instituted? So the right people who have to sign are in a position to sign effectively. How do I check out supplier onboarding, get the right contact, get the right payment data? So in fact, I can get suppliers on my books, know who they are, and be able to pay them in the currency, in the channel that they want to be paid in. How to collect the necessary tax forms that you have to live with. Again, we're moved outside the US where tax forms are relatively straightforward. Into worlds you've got VAT and you've got a whole bunch of other things. How are you going to track that? How are you going to identify fraud? This is not a safe world. There are criminals out there. There are fraudulent suppliers. You want to make sure you have ways of controlling that, making sure it doesn't happen. And of course, what happens on the AP side matters from the finance reporting side. You want to have accurate financial reports. Firms have run into deep trouble because their financial reports were inaccurate. People have been fired. People have lost jobs. People have gone to jail. So you want to make sure your financial reporting is up to date and tied into that payment and to reconciliations around that, and tied around tax forms. So these are some of the big challenges you're facing. I'm going to go into a little bit more depth. Now, certainly in the US, certainly a lot of my coverage, the major focus around AP has in fact been on the invoice side. It's been moving more and more to electronic invoices where you are setting up mechanisms where whether or not your supplier can provide electronic invoice, you can bring into your system electronic invoice data. Whether that's done through various tools, for example, what's called PO flip, where a PO goes out and the supplier can turn around and generate an invoice, send it back that way. Whether it's done through the invoices all get, paper invoices all get mailed to a dedicated center that opens them, scans them, captures, sends electronic data. Whether it's through providing tools or mechanisms for suppliers when they do a invoice print run that they can peel off and have sent electronic invoices to you. There's a whole portfolio of tools that are out there to allow you, even if most of your suppliers don't deliver electronic invoice, to get electronic invoice data in. But of course, getting electronic invoice data in is just part of the process. You, of course, want to match that against the PO, match it against the contract, match it against receipt. Sometimes they don't exist. Sometimes they don't match. So you have to have workflow to be able to route that to the right person who can say, yes, it's a valid invoice. Yes, I know we don't have a PO. Yes, I know it's why. Here's why it's different. It's acceptable. You can pay it. That then feeds into the AP system, which generates your advance payment notices. But when you have the advance payment notice, now you get, the quicker you get your advance payment notice, the better position you are to say, you know what, let's look at all of our payables that are due and see which ones we might be able to offer earlier payment to our suppliers to get discounts. That's why within the e-invoicing space, one of the hottest topics is what's called dynamic discounting, where you go all the way through the process. You receive the purchase order, you match against the PO, you generate the advance payment notice, it's ready to send it. And when you send it through various mechanisms, you can offer the supplier, hey, we're going to pay you on July 25th, full amount. However, if you want to get paid earlier, we're happy to do so if you give us a discount. Now, this example is a 2% discount. Could be 1%, could be 0.5%, whatever the supplier is willing to look at. But if you have 2%, remember, that's cheaper for a supplier than doing a P card. Because P cards tend to be 2.5%, 3%. So to a supplier, you know what, if I get paid next week, yeah, I'll give you a 2% discount. I'll give you a 1.5% discount. That goes to your bottom line. For AP, that becomes a revenue gain. Of course, you still have to deal with the issue of, okay, now the payment doesn't match the invoice and the PO, so we got to reconcile that. So there's a little challenge around that. But isn't it worth it to be able to save some money and be seen by your executives as, hey, we're a contributor to profitability because we just saved $20 on a $1,000 PO. But of course, this only works if you have suppliers that you know about, the suppliers that you've onboarded, Suppliers who you know what is their preferred payment method or methods, so you know which payment channel to send it to you. What's the account number? Whether it's a bank number, whether it's a card number, whatever. Do we have the right identification about them? Do we know that, in fact, this is a valid supplier or someone trying to spoof us? And increasingly, do we have all the right tax ID numbers? Because in a lot of cases, you've got tax implications of this. So it's a whole set of data you've got to collect. You've got to make sure it's accurate. That is now, especially in a non-US environment, becomes a real pain in the neck. Especially outside of the US, I said tax compliance is an issue. In the US, we don't have VATs. Outside the US, you've got a lot of VATs. Value-added taxes involve a lot of accounting because the whole calculation of the value-added tax comes at the invoice level. So tax authorities want to know what is it that you got invoiced, what you paid, because that's going to help determine what the VAT is going to do. Now, and of course, if you don't comply with the VAT laws, there are penalties for that. So you've got to manage that. But there are other laws. There's this FATCA stuff. FATCA is this kind of somewhat bizarre law that came about as a revenue raising, which involves, the thesis is that there are a number of US residents living overseas who are not paying taxes that they owe to the US government. And so it's viewed as a revenue raising mechanism put into one of the budget bills, which imposes a lot of penalties on US citizens living abroad or financial institutions to support them in terms of providing reports back to the US about payments that are being made. Now, this is not a direct problem for US companies, but it's an indirect problem because many suppliers have to worry about this. So you have to worry about that. What is a direct problem as well is a lot of the regulatory laws related to money laundering and terrorist financing. The OFAC laws, for example, where there are concerns in the US about money being fed through money laundering organizations or being used to fund terrorist operations. Again, you've got to comply with. So tax compliance, once you move out the US, becomes a much, much bigger issue than it is in the US, where it's pretty straightforward. In the US, it's basically, federal income tax, state income tax, some local taxes, not really a big issue. And of course, finance reporting runs into problems if AP is not operating right. Those financial reports are balancing your revenue flow and your costs. Your data around costs comes from your AP system. If those don't balance, if they're not accurate, then your financial reports are not going to be accurate. So you find firms spending a lot of time scurrying around trying to reconcile, trying to make sure that the data they've got is accurate, closing the gaps to make sure that everything is tidied up. And of course, if you don't do that, then there are penalties again for fraudulent or false reporting. So in conclusion, in today's business, accounts payable effectiveness, what's been referred to as holistic AP. It may not be the central thing that CFOs are focused on. So that CFOs are much more focused on the revenue side, much more focused on the AR and all of the tools and systems for budgeting, for planning, for optimizing revenue flow. But AP still remains critical to business success. It may not be glamorous, it may not be exciting, but it's essential. The right solution for holistic AP can help you manage payments more effectively, to make sure you stay in compliance with the laws, to make sure you stay in compliance with the regulations, to handle all the complexities I talked about suppliers in different countries, in different currencies, with different payment mechanisms, with different tax regimes. By doing that, then you can allow the CFO to focus on what they really want to focus is on this customer-oriented finance. So it's not glamorous, but it is critical. Now there's some upside in this as well. The right solution can also help you capture discounts, can help you avoid penalties, can help you avoid sanctions. There's a really solid business case that can be made around both the upside benefits of things like dynamic discounting and the avoidance of harm that can make a holistic AP solution not just pay for itself, but be a strategic value to the company. As I said, the CEO may never give you ribbons for this. The CFO may never stand up and say our success depends upon this. But the CFO knows if you don't get this right, then it is a source of failure. And they don't want failure. So think about what can be done to help achieve a holistic AP that deals with the complexities of today's business world, not one that is rooted in the old paradigms of last year's business. You want today's Lexus, not yesterday's Oldsmobile. Thank you.